3 rate cuts in 1 year, and the Fed might deliver another one today. If monetary policy were a series on Netflix, this would be the episode where everyone pretends they know the plot twist, but they are still watching popcorn in hand. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, everyone. I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief, where each morning I break down the biggest movers across currencies, commodities, and indices, mixing fundamentals, technicals, and adding just enough logic to make sense of it all. Let's kick things off today with Euro USD. So currently we can see the dollar index is holding near 99.2, effectively flat ahead of tonight's Fed decision, where markets are, expecting a third 25 basis point cut this year. But the Fed isn't exactly singing in harmony. Policymakers are divided between cut more and don't poke the inflation dragon. Job openings pushed up to 7.67 million, beating expectations, while ADP data showed private sector hiring stabilizing. A slightly firmer labor picture gives the Fed more to think about. On the euro side, hawkish comments from the ECB reinforced expectations that they could hold rates steady through 2026. Rising risk to growth and inflation have traders treating Euro USD like it has structural support underneath it. Looking at the charts, price is hovering around 1.1626, just off those multi-day highs. Upside resistance sits at around 1.167, the ceiling that has capped recent momentum. A clearer break above that level opens the path towards 1.173. On the downside, 1.158 remains an immediate important support zone, with deeper levels at 1.154, then 1.147, and then the 1.14 flat level if bearish pressure accelerates. The technical bias still leans upwards, but with notably less enthusiasm, like a rally that's running but checking its smartwatch every 20 minutes. Moving over to commodities, WTI is trading around $58 a barrel, holding most of its two-day slide. Supply concerns continue to dominate. U.S. output expectations are set to hit a record 13.6 million barrels per day this year. Global markets are showing signs of saturation, and diplomatic conversations around Russia and Ukraine is adding another layer to the sentiment. API data revealed a 4.8 million barrel draw. Typically, this would be supportive for oil, but rising gasoline and distillate inventories balance that optimism out really quickly. With the Fed expected to cut tonight, oil traders are itching to see whether demand expectations for next year improves or flattens out again. Looking at the charts, WTI dipped to $58.22, down slightly from yesterday. Over the past month, crude is down 4.38% and nearly 17% year on year. Price continues to sit in a broader downtrend defined by supply abundance and a softer demand signal. Short-term fluctuations aside, the chart suggests oil is still searching for a convincing narrative, and today's Fed decision might help define one. Finishing things off today with equities, the DAX recently hit 24,190. Its highest in almost a month, marking 4 consecutive sessions of gains. Even so, markets are cautious with the Fed decision looming. Key performance highlights coming out of Germany. Well, defense names led the rally. Hensoldt was up 4.7%. Rheinmetall was up 4%, and Renk was up 3.3%, helped by news that Germany may approve a 52 billion euro contract in procurement. Financials added to the momentum where we saw companies such as Allianz and Deutsche Bank all advancing. Meanwhile, Airbus dragged on the index, and we also saw ThyssenKrupp slip 6.6% after a cautious outlook despite returning to profit. The latest print showed that the German 40 is pulling back slightly to that 24,119 level. But longer-term momentum remains intact, with the index still up 18% year-on-year. Looking at the charts, price remains below the all-time high at 24,777, but well supported within its current upward structure. Momentum has cooled slightly ahead of the Fed decision, which is a classic wait-and-see posture. Structurally, the DAX looks firm, with dips well supported, but headlines, not charts, will likely steer the next move. Tomorrow's session could look very different, depending on two things: whether the Fed delivers a hawkish cut and how Powell frames the 2026 outlook. The question here is, will markets cheer or choke on the guidance? Well, we'll break that down in tomorrow's brief. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to atfx.com and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.